Has this beaten down stock gotten low enough where it's a buy? Let's check it out. So first off, they're expected to report $2.11 per share in profit, and they're expected to do $34.46 billion in revenue. The same quarter last year, they did $1.86 in profit and $32.6 billion in revenue. So the first thing I have to say is, when I hear people say that Alibaba is a dying company and a dead company, my first response is, how do dying and dead companies grow their profit and grow their revenue? It reminds me back 12 years ago when people told me Microsoft was dying and dead, and I was like, but their revenue and profit go up every year. How is that dying? But there's a lot of negativity around Baba. Why? Well, all-time high of 319 was back on October 27th of 2020, and it has fallen since then. It got as low as $58 at one point. But news follows the stock price. News follows the stock price. The question is, has this gotten cheap enough? Because remember, back in 2020, let's go look at how they did in terms of their revenue. Back in 2020, they did $71 billion in revenue. In the last 12 months, they've done $131 billion. So the price is down 80% at one point, and revenue is up a ton. That's incredible. Absolutely incredible. Profit back then was 20.83. Okay, profit's down 11.15. But you look at this and think to yourself, okay, so profit's down. Could that be a permanent thing? Is it temporary? Just like Disney, Southwest, these things? That's what the question is. Now, here's the interesting part. You look at the profit going, come on, that's the obvious reason. Yeah, but look at cash flow. From 2020 until now, it's actually up 20.86 in the last 1 year. Cash flow is actually up. So they had some temporary things that have driven down their net income, but their free cash flow is actually up. Not a ton, but it is up. This is a company that should pique your interest. Why? Because it's currently selling for 9.5 times free cash flow. 9.5 times free cash flow. $20 billion a year for the last 5 years. That is incredible. A $200 billion market cap, enterprise value of $211 billion. Great balance sheet. And they're buying back a ton of shares, which I absolutely love, and they announced it after the stock fell over 50%. Now, I have Baba, and I'm down a lot on it. I'm okay with that. Remember, if you gauge your performance based on short-term price fluctuations, you're going to have a hard time making a lot of money. And there's a lot of criticism about Baba, but I'm into Alibaba for the long haul. What's my thesis on Alibaba? Do I think it's going to be around for a long time? Yes, I do. Do I think their revenue and profits can be higher in that future than it is today? Yes. So the third question that we're trying to answer today, can you pay a reasonable price for the company today that gives you an adequate return on the money factoring in the risks? That's the question. Now, what are the risks on Alibaba? Well, for one thing, it's in China, and that is a scary situation. They're still a communist country, theoretically. But boy, for a communist country, they have a lot of billionaires. They have a lot of really rich people. Because guess what? There's a little secret about communists. They fucking love money. How else do you support and promote such a terrible agenda, but with lots and lots of money? And the people who run the Communist Party love getting rich. Don't ever think that communists actually believe what they say. They still want to have wealth. And it's the fastest growing middle class in the world. It's probably the fastest growing billionaire class in the world. And they've got a lot of people there who want to become wealthier. Are they still having population issues? Yes. But it's still a country in which the average person makes about 15% of what the average person in the United States makes. I'm not afraid of China from taking over the US economically. Guys, they got 1.5 billion people, 1.4 billion. They're going to have to be bigger than us at some point. We have 330 million, and our growth is not huge in terms of population. There's a lot of issues there. Let's go see what the 8 pillars are saying about this company. All right, you have a low return on invested capital. That's something to be concerned about. A big drop in net income, which I think we explained earlier, because the free cash flow is up $2 billion and the revenue is up $60 billion. So I look at this going, okay, I like this. And I love the fact they're buying back cheap shares. Wow. Even their PE with big drop in net income is still 14, and their price to free cash for the last 5 years is 9.8. Guys, I wish I had 40 companies that looked like Alibaba in my portfolio. My potential returns, I think, would be great. But again, you're watching this video because there's some sort of fear there. And I'm not trying to tell you you should have no fears. You should always have a fear in something being wrong in the investments you make. But how much of those fears are real fears that haven't existed for years. Every fear I hear about China, I'm like, yeah, that existed 5 years ago. Yeah, that existed 5 years. These all existed as Alibaba stock was going like this. But since the tide turned on Alibaba stock, now those issues matter because news follows the stock price. When the stock price is down, the news has to justify that. ADRs, really? That's always the case. China's going to attack Taiwan. That's been on the news for a couple of years now. Come on. It could very well be the case. And listen, there are some great investors I know who say, you know what? I don't understand China. I don't want to get involved with it. I'm not going to buy Alibaba. It looks like a good value, but I don't feel comfortable. Great. You know what's interesting? A lot of great value investors are buying Alibaba now. They're buying it under $100 a share. Okay, that's nice to see. You know what else is interesting? The Asian markets collapsed and Alibaba has gone up. That's kind of interesting. July 11th. Since July 11th, Alibaba stock is up about 9%. Where's the Nikkei index? Now, Alibaba's not in Japan, but it's in the same area. It's pretty interesting to me. Has everybody who's going to sell Alibaba sold Alibaba? I don't know. But if you're going to determine if you're right or wrong on Alibaba based on where it ends the year at or where it goes a year from now, you shouldn't be buying this stock or any other stock. Well, we're here to teach a process. We're here to teach the process that allows you to be able to make better investing decisions for the long run. Now, let's see what the analysts think about Alibaba. Not a lot of growth in the EPS. It is a concern of mine. 887 and 994. I think to myself, what do the analysts see that I don't see? Because I just see a growing company, growing revenue, getting back to normalized profit margins with that cash flow number that's still insanely huge. $20 billion. How many shares outstanding do they have right now? 2.5 billion. That's $8 per share in free cash flow right now. Okay, what about revenue growth? It's there, not huge, high single digits with 1 year of a drop, but still growing. Remember, a company that isn't growing fast, if you pay a cheap enough price, can make it a great investment. What drives your returns are going to be what's the price you pay for these companies. Now, guys, I'm going to show you this in the Stock Analyzer tool. We use all of these tools we have in order to help make these decisions. The Stock Analyzer tool was so great for me because it allowed me to actually apply numbers in my assessments about the future and say, here's the price you need to pay to make a great return. But if you've watched this channel, you may have noticed that we only have a limited number of daily spots for our software and community. And the reason for that is that the software as it exists today currently includes everything we have to offer for stocks, real estate, and retirement, all of these tools. But now we have 4 YouTube channels. And behind the scenes, we are making some really, really big changes as we continue to expand these channels. These offers up here are going to get separated. And the current offer of everything is going away very soon. You may remember that when I first started the channel, I built the software selfishly for myself and my team so we could use it to make better decisions in all aspects of my money and investing. But the channel has grown immensely. The community has grown immensely. And so since then, it's becoming less about me and more about how I can better serve you and the community members. So the good news is these changes haven't been made yet. We're still working behind the scenes to do it. So if you join today, you'll be grandfathered in for life with all of the data, all of the tools, and every future tool we make. You'll get all of it, and you're going to keep your price forever. This is the best deal we've ever offered, and if you're really serious about making better financial decisions, increasing your returns, and more importantly, sleeping better at night, click the link in the description below. Go to everythingmoney.com/sign-up to get access to everything we have to offer, and I assure you, it'll be the best decision you've made all year. It's so important to do that, and this is why I use these tools. By the way, Alibaba is up 3% today, interesting enough. So let's pull up my last assumptions on Alibaba. I did a 10-year analysis. Now remember, it doesn't include the balance sheet, but I like the balance sheet where it currently is. 3, 6, and 9% revenue growth, okay? Nothing astronomical, nothing terrible. 3, 6, and 9%. Profit margin, 15, 19, and 23. Free cash flow of 17, 22, and 27, because their free cash flow is considerably higher than their profit margin. PE, 16, 18, and 20. Same with price to free cash flow. And guys, your desired return, I put in the market return of 9 or 10% to figure out what's this company worth intrinsically. But you need to put a margin of safety in here, especially with your fear on Alibaba and China and things like that. Put in a much higher number here. This will give you that margin of safety that you absolutely need because, guys, the future's unknown and we're humans. We make mistakes. You need margin of safety in everything you do. So hit the analyze button. Boom. Guys, low price of 120 to 140, high price of 350 to 400, middle price of 215 to 250. This could be a potential multi-bagger. Guys, I appreciate you watching this video. Click the link below, join the community, $7 for 7 days to try it out. Take care.